G'day guys, and welcome to another YouTube lesson. Today we're going to take a look at financial management and finance, and we're also going to be taking a look at key influences. Just to get a quick recap, and I say this each time because it is so important. We need to understand the format of the business studies syllabuses. It'll help you remember for your HSC exams. For each business function, all four of them, for HR, finance, operations, marketing, there's four parts, four subtopics to each of those four, with the exception of HR that has five. We've got the role of the job, the influences, which is what we're going to be looking at now, the processes, the set of steps that a financial manager needs to follow, and the strategies, that fourth one. What are the things a business in terms of finance can put in place to improve those key financial objectives for a business that we've mentioned before. Now, today's syllabus dot point will take a look at key institutions. An institution is a big, entrenched, substantial organisation. Okay, and we take a look at banks, investment banks, finance companies, superannuation fund, life insurance companies, unit trusts, and also the ASX, the Australian Securities Exchange. So we're having a look at what these institutions, organisations, companies are, and also the theme I've talked about before, which is how are these influences, how do these impact on financial management, and in particular, those five key financial objectives. All right. Now, financial institutions, first off. These are financial bodies, banks, NBFI, that non-bank financial institutions, such as finance companies, that lend money to businesses or companies, provide an avenue for a business to access equity, as you'll see in the case with the ASX. And this helps business, be able to grow, expand, meet that growth objective, be able to increase profitability, and so on and so on. Now, banks. You know what banks are already. They're better known as retail banks, okay? And these are the main providers of finance to consumers and also SMEs, small to medium enterprises. Not so much for large businesses such as Telstra and so on, okay? That's where we more get into investment banks and what they can do. Now, as I said before, banks are formerly known as retail banks. They take savers' deposits. That's hopefully you and me putting money into the bank, and they lend them to small and medium businesses in the form of loans. You know the stuff we looked at last lesson, mortgages, etc., etc. Those type of overdrafts, that's where these ones come into play. They differ from the next one, which is investment banks, in that they deal with individuals and small to medium businesses, not large businesses or companies, and manage funds. Okay, an example of the retail banks include Commonwealth Bank, shouldn't be advertising either of these banks, but CBA and Westpac. And these are case studies I guess you can use when you're writing your essays or even answering your short answer questions. Now the next type of what we call institution, financial institution, are investment banks. These are also sometimes called merchant banks, and you and me, individuals and SMEs, small to medium enterprises, we don't have access to this. They're there for specialist medium to large corporations. Now, they assist large companies in securing large amounts of capital. That's a lot large, huge amounts of capital, whether that be through loans, such as debentures or unsecured notes, or by facilitating large investment in private companies, so equity. Some examples, two examples of investment banks include Macquarie Bank, formerly known as the Millionaire Factory, and ABN AMRO. Now, finance companies. This is another financial institution. They also are there, think back to the last lesson, debt and equity funds and source of finance, allowing businesses to grow, to be able to remain liquid because they can get an overdraft, to be able to increase profitability because they've grown and have greater capacity to generate profits. Finance companies are again another institution, just as investment banks allow businesses to source funds, allow retail banks allow businesses to source funds and to grow and meet those financial objectives. Finance companies are called NBFI, non-bank financial institutions, that solely make loans to, unlike the previous one, these merchant banks, they make loans solely to consumers and businesses. These loans usually have a higher interest rate than the banks and have less strict credit checks and criteria. That's why sometimes, if you can't get a loan, I'm not suggesting this because you can overextend and there's lots of problems with this. But banks usually are more strict and less likely to give out loans. That's retail banks. That's why sometimes people go to finance companies. They're less likely to knock you back, but the rates of interest are a lot higher. So you've got to factor that in when you're taking out a loan from such a non-bank financial institution. Some examples include GE Finance and Asanda. They are two examples of finance companies you can use. Now, another financial institution are super funds, superannuation funds. And Australia is very unique in terms of compulsory superannuation, where you're forced, your boss and you, I guess, are forced to be able to have part of your salary, presently it's 9.5%, taken and put in a separate fund that can only be taken out, and often now not in lump sum but in smaller parts, when you become of retirement age. All right, other countries it's voluntary, but I think it's a great idea. It's one of the best initiatives I think brought in with the Hawke and Keating Labor government. In essence, at the moment, there's a 9.5 compulsory superannuation competition that bosses, employers must make to their workers, their employees' superannuation fund. The plan at the moment is to have this increased to 12% by the year 2025. That should have already been the case, but one certain Prime Minister thought it was essential that we have a pause on that, because the average worker, someone on say $50,000, we don't want to make sure they get any extra money. Anyhow, some examples of super funds include Syllabus and First State Super. Again, ask yourself this question. That's all good, sir. I get super funds. They're all great. I can define it. I can say all those stats you said. How is this got anything to do with being an influence? Remember the last lesson, we're taking a look at sources of funds for businesses. If there's a huge pool of money sitting there in super funds, we go back to this lesson still, but we take a look at investment banks. They've got access to that huge pool of money. And it's not just sitting there in banks. It's being used by big businesses like Telstra, BHP to be able to grow and expand. We as workers are making investments into massive companies, publicly listed companies without even knowing it. And that's good because it gives us a chance to gain access to some of that profit. And so it's an influence from the perspective that that pool of money is there to help businesses grow. At the same time, give us as workers 9.5% compulsory super. Now, the next financial institution are life insurance companies. These are companies that will pay out to a family upon the death of an employee. I.e., if I was to die, God forbid, I see you weeping. So sad. If I was dead, you're like, sweet as. Who can I have as a teacher instead? My wife's probably saying, sweet, who can I have a husband instead? Then my wife will receive a payout from my death from the life insurance company. Okay, now, it's seen as an influence because most medium to large businesses make contributions on behalf of their employees to life insurance companies. Okay, now, the cost of these premiums is bad for a business, I guess. It's an additional expense, increases that efficiency ratio, reduces the profitability ratio, and those two objectives. But just like super funds, life insurance companies, they have a huge pool of money, a huge amount of money from these premiums. And they will use this money to invest in other companies, maybe debentures. Okay, maybe they'll buy into big publicly listed companies in terms of equity funding. So that is another source of finance for companies and businesses to grow. Unit trusts is the next financial institution. And this is a shorter clip today and got after the last one. And these are also known as managed funds. There are companies that pool investors' money, or these companies pool investors' money, put them together into a unit trust or a particular fund. I actually have unit trusts. They're called index funds. And for my one, they're based on the top 300 ASX companies. And so I've put in 50 grand or something. And obviously that's not enough to buy all those companies, but it buys a little bit of each. And lots of people put money in, less, more, and so on, and they can afford to share the brokerage fees amongst all of us, so it's not so expensive if I was to do it myself. And that's kind of what a unit trust is. It's a managed fund. Again, how's it an influence? I want that theme running through your mind. How's it an influence? It's an influence because many companies are able to gain funds from these unit trusts, these managed funds. It's a major source of equity for businesses wishing to expand, to grow. Now, the last financial institution, perhaps one of the most important, is the Australian Securities Exchange. I'm sure from me or your teacher you've heard of the ASX. If you haven't, there's some problems. It used to be the Australian Stock Exchange, and there was the Sydney Futures Exchange. They merged, joined together, like that sound effect, joined together, and they're now called, or sometime they've been called, the Australian Securities Exchange. It's got a number of roles, the ASX, but its key job is to assist companies wishing to float on the stock exchange. That is, to list themselves on the stock exchange. Securities Exchange. I'm still thinking old school. It is the organisation that allows for the buying and selling of shares of a publicly listed company, such as Telstra or NAB. Again, it's an influence because it's, without that there, the equity part of the previous source of funds lesson, you don't have the marketplace to allow that to occur, to happen. All right, guys, thanks again for listening, and I'll see you in class.